What's going on, traders? Welcome to the channel. My name's John. That's Groot, our friend, and we trade options here. So we're covering really quickly thinkorswim, how to view implied volatility. There are 4 primary ways, and this is going to help you determine a couple things. If the options you're looking at are expensive or cheap, what type of contract expiration dates you want to consider trading, and how you can use these to your favor. So let's dive right in. First and foremost, you see this on my channel all the time, the Vix Volatility Index. This measures the put and call ratio volume in the overall market. So generally the higher it is, the higher you're seeing options premium being. So meaning you want to buy a call, you're probably paying a higher rate than someone else in the past was doing when the VIX was at a lower rate. Or if you're wanting to buy a put, maybe have some downside protection, well, generally speaking, if the VIX is trading really high at elevated levels, that means you're paying a higher expense and premium for that trade. Now, other ways, if we're looking at just individual stocks, say maybe like Apple or so, the VIX was kind of an overall market thing. We want to go here, go to studies, add study. I'm in the chart section here. And then as I go to all studies, I can go to the I section, and that'll give me IV, which is IMP volatility, implied volatility here. And this will kind of tell you how Apple's doing relative to recent times here. And I like that it shows you at a historical value, maybe how high the options pricing was in the past versus where it is now. So since we're at a lower rate now, and Apple's been kind of trading steady, this does imply somewhat that we aren't expecting any big massive moves, and because of that, the options market is pricing Apple options at a cheaper rate than perhaps in the past, like when we were at this all-time high here at 145.09. So just keep that in mind. That is a really useful tool here. But another thing too, let's jump into maybe like say Tesla just for fun, and I'll show you another big one that has high implied volatility. We can go to AMC, which I know was a big one, and you can see this massive spike in implied volatility, and this basically did get us to a point where there was so much movement in the stock and basically the underlying options that we had said, hey, there's going to be a big move, but we don't, and we know the magnitude based on the implied volatility, but we don't know the direction. It will never tell you if it's going up or down, just basically the potential movement magnitude. And we saw this as we went from $20 a share all the way down the next day to a low at $6.50 approximately. That was a massive swing, and then we swung back up and then down. And you can see as things started to sort of stabilize in terms of the pricing, the implied volatility also drops. That's a really nice, easy way to see this. And next, let's look at when you go into the options chain for a stock, you're going to want to go to the trade. So I was in charts. Up here, you're going to click on trade, and you'll see the options chain. Look to the right, you're going to see this percentage area, and this will actually tell you the implied volatility of that options chain. So like May 21st, 2021, we're looking at about 59% there. As another example, let's look at the same expiration date, but for Apple, May 21st, and that's at 25%. So Apple is trading lower. Let's go to AMC, and you're going to see just monsters here at 135%. So what does this really mean? Well, basically, if someone wants to buy a put or a call in AMC, they're paying a higher premium on this trade. You're sort of almost getting like a lottery ticket, but the fee to buy in has gotten higher. Or if you're trying to sell the lottery ticket, you're selling them to the purchaser at a higher value. So as this is higher, you may want to consider being an option seller in AMC, but maybe in Apple, if you're very bullish or bearish or so on, you could be finding purchasing calls or puts maybe at a cheaper value than in the past, historical trading ranges and implied volatility for Apple. So that's really helpful, useful tool, but you're going to watch a couple things. I have a really big strategy that I use for income here, and also when I'm looking at the overall VIX and the market at a lower volatility, I kind of have a strategy that is here, and that's sort of the next step in this process. So go ahead and check it out. It's right here. Yep, right there.